Operator of Boeing 737 MAX planes currently.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
how are
story.
you thinking about those dynamics? The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
The market that over the past few weeks has made it clear it wants to go higher. Got a little spooked by the idea that geopolitical tensions are rising.
From New York City, for our audience worldwide, good morning, good morning. Following a massive weekend, futures down 1.4% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. A lot has changed. Ukraine officials arriving at the Belarus border for a high-stakes meeting with Russian counterparts. President Zelensky still skeptical, saying, I don't believe that much in the result of this meeting, but let them try. So not a single citizen of Ukraine has any doubt left that I use every chance to stop the war. Talks coming following Western allies sanctioning Moscow's central bank and cutting off various lenders from the critical SWIFT messaging system. Jen Psaki suggesting the U.S. could go further.
We want to take every step to maximize the impact and the consequences on President Putin while minimizing the impact on the American people and the global community. And so energy sanctions are certainly on the table. We have not taken those off, but we also want to do that and make sure we're minimizing the impact on the global marketplace.
President Putin responding, saying, quote, I'm ordering the defense minister and chief of general staff to switch the Russian army's deterrent forces onto a high alert mode of combat, standby duty. Team coverage starts right now with AMH from the White House and Bloomberg's Maria Tadeo in Geneva. A fast-moving weekend, AMH, and some news this morning too.
Yeah, that's right. Russia remains even more isolated this morning, Jonathan, off the heels of what Governor Elvira Nabiullina said over in Russia, that today the financial industry is just not working as it should be. I think you called it an understatement of the year. What we're hearing from the U.S. administration is more details about the sanctions that came this weekend. Right now, they are banning any U.S. investor, any business from dealing with the Central Bank of Russia, their National Wealth Fund, and the Finance Ministry. This is what Treasury Secretary Janet Yellen said in a statement. The unprecedented action we are taking today will significantly limit Russia's ability to use assets to finance its destabilizing activities and target the funds Putin and his inner circle depend on to enable his invasion of Ukraine. Jonathan, the U.S. administration, when they talk about those funds, they're talking about that $630 billion reserves war chest that President Putin has built up over the years.
Maria, let's do two things. Let's start with the effort at the border with Belarus right now, the negotiations that are ongoing, and let's talk about the effort where you are.
Yeah, Jonathan, and you talked about the isolation of Russia. Well, let me give you a very real-life scenario that is happening here. Today in Geneva, there is a United Nations Council. The Russian Foreign Minister, Sergei Lavrov, was supposed to participate, and that is the reason, in fact, why we're here. Now, we're finding out from the Russian delegation that Mr. Lavrov is not going to be attending this meeting. There's a number of reasons for this. One, of course, is that we're seeing a diplomatic isolation of Russia in many ways from the West as a form of protest to the attack that we've seen in Ukraine. The other one, of course, is the practicalities of the sanctions that have been approved already. As you know, the airspace in the European Union is shut to Russian planes and Russian-registered flights. It's also worth noting that Mr. Lavrov himself is now personally sanctioned by the United States and the European Union. So this is the real-life impact that these sanctions are having all the way to the Russian political elite. Now, when it comes to the talks happening on the Belarus border between the Ukrainian delegation and the Russian delegation, look, both sides said we want to talk and there's no preconditions going here. But the Ukrainians have made it clear if Russia wants a total capitulation, they're not going to get this. And by the way, we need to see a ceasefire and Russians pulling back their troops. So again, these are very difficult talks, but you need to factor that for the Ukrainians, they really do feel the tide is turning and they're not just going to agree or concede to anything that the Russians put on the table.
Crude up this morning by 3%, Brent at 101. Anne-Marie, WTI at 95.70. We're off session highs because there's some talk this morning of a repeat of last year, a reserve release. What are you hearing?
Yeah, potentially we could get a strategic petroleum reserve tap from the United States, but also, Jonathan, they would likely repeat what they did last year, which is making sure they can coalesce other consuming countries which are struggling to also dig into their reserves. So they would do this coordinated release to make sure they could try to at least at some measure tamp down the pressure on the oil market, because we all know domestically this is a very important and significant issue for the president, especially as the Democratic Party gears up to try to maintain some seats ahead of the midterm elections. Jonathan, we should also note what is happening right now with the sanctions. The United States is trying to have a carve out on some of these banks for energy trades. The issue is, what I'm hearing from talking to a number of people in the industry is they might self-sanction.
Yep.
Why would a bank want to go do business? It's going to be very difficult. And not only that, the natural gas market might be a little bit different, but try to find, is what I'm being told, try to find a ship or tank to want to go pick up Russian crude right now. The freight rates are incredibly high, and this is all adding to that price premium you're seeing in the oil market.
The theory meets reality, and that's the reality at the moment. AMH down in DC. Anne-Marie, stay close. We'll catch up with you through the hours. Maria Tadeo of Bloomberg out of Geneva this morning. Thank you. Dollar ruble, a move of 32%, 110 right now on dollar ruble. Understatement of the year comes from the Russian central bank governor, who said this morning, quote, the financial system is facing what she called calls a non-standard situation. To talk about that non-standard situation, joining us now is SocGen Subhadra Chapter, John Hancock's Matt Miskin, and Ashok Bhatia of Neuberger Berman. I want to come to you, Subhadra, first, and ask you whether your base case now is a Russian sovereign default.
I think it's really hard to know, but you're going to see this isolation only build up, and this is not a situation that's going to resolve itself anytime soon. So really what you're seeing in the markets, broadly speaking, is exactly what you would expect, which is sort of a readjustment, if you will, from Thursday to Friday, where we saw a little bit more optimism, to something that's going to be much more drawn out. So, definitely that's a possibility. Things seem to be heading towards a more dire situation in Russia, for Russia. But broadly speaking, I think the market is going to take it in stride because there's really not that much of a, bigger impact for, the U.S. economy. I think the impact is going to be much more on Europe. But even there, broadly speaking, I think the impact is going to be muted. You're seeing a near-term flight to quality into treasuries as well as a sell-off in equities. But we'll have to see. This is not a one-day resolution. It's going to be over the next several months.
Ashok, there's a range of unintended consequences we could explore. What's your base case now?
So base case is, I think, 3 quick points. First is this is a major event for Russia. Obviously, we've gone from, part of the global economy to effectively being cut off from it and the banking system in 24 to 48 hours. And, questions about Russia default, local debt, currency rates. I mean, this is a sudden stop in the Russian economy. I think, the second, though, is that the recession risk that comes from this for the global economy, it still remains pretty low. Global economy enters this event at, with pretty strong underlying growth. And there are still policy mechanisms, we've been talking about the crude oil release that can mitigate some of these impacts. So low probability of big contagion. And then third is we think there will be a central bank change. We think peak hiking expectations are done. Not that the Fed still won't hike, but we think we're going to gravitate back to something like 4 hikes rather than 6 to 7, ECB on pause. And so that will help provide a little bit of stability. But overall, this is really, focused on Russia, and this is day one of sorting out those implications.
Matt Miskin, as Ashok points out, it's day one. And when you look at dollar ruble, I caught up with someone out of the city of London this morning who basically said this is not a proper market. And it's not a proper market until foreign holders of Russian assets can actually sell into it. Right now they can't. We heard from BP over the weekend they want to dump their Rosneft stake. OK, we've got to work out and see how that plays out in the coming weeks and months, Matt. Have we actually seen the move from the weekend's events? Have we actually seen the move yet this morning?
Still think you need the dust to settle more, and you can't mark to market certain assets right now because they're not even trading. So there's going to be more of a discount likely built in. To us, this is not the time to be unloading assets. You're seeing selling at any price right now. People just want out, and investors just want out. That is not usually a good time. We would be providers of liquidity versus takers of liquidity in this type of a market. But our positioning is we would lean more in the U.S., look for value in the U.S., healthcare, industrials more broadly in terms of sector exposure, focus more on quality. We'd be concerned with the European banks here. We think there's going to be more connection there with this conflict. And so you want to be very mindful in terms of risk management, taking European value exposure here in the financial sector.
The hope was that we get an ECB rate hike, and that's what pushed some money into the European lenders through much of this year. Now the pullback is brutal. Unicredit down by 12%. Raiffeisen out of Vienna, Austria, that is down by more than 15 percentage points. Subhadra, I am no expert on the plumbing of the financial system. Zoltan Pozsar of Credit Suisse is. This is what he wrote over the weekend. I think we all reached for that note over the weekend. This is what he said. Banks' inability to make payments due to their exclusion from SWIFT is the same as Lehman's inability to make payments due to its clearing bank's unwillingness to send payments on its behalf. History does not repeat itself, but it rhymes. Does this rhyme with anything dreadful that's taken place in markets, Subhadra, over the last 15, 20 years?
I think this is a very unique situation, right? I think in the case of Lehman, it was the company's inability to meet its obligations. Here, Russia has just been cut off from the financial system, so to speak. So this is a very unprecedented, type of action, global action, if you will, but one that's much more impactful on Russia than all the other countries in the world because of the fact that it's going to be the Fed is going to be able to step in, provide dollars if there's a need for dollars. It's going to be able to perhaps help industries that are most impacted by direct connections with the Russian economy. And same with other central banks like the ECB. So I think this is a very unique situation. And for the most part, I think the exposure for the U.S., the Russians don't hold a lot of treasury debt. It's mostly all in dollars and in the FX market. So the impacts are going to be localized in certain FX markets and not broad brush impact, if you will.
We'll work our way through these issues into the opening bow. Futures right now, well-off session lows down by 1.3%. Sticking with us, Subhadra Chapter, Matt Miskin, Ashok Bhatia. Looking at the equities this morning. Let's get you some stocks ahead of the opening bow. It's Kelly Lines.
Well, John, we have to start with one in particular that you mentioned, and that is BP. Those ADRs moving lower by about 7% in pre-market trading. The company weighing reputational risks about keeping that relationship with Russia's Rosneft oil and deciding it is better to just offload that stake. So that stock is down. The question really is, does this mean selling it? Can they find a buyer? And if it just means walking away, does that mean a $25 billion write-down for the company? Also moving lower to a way larger extent is Yandex. This is a Russian internet giant that is listed here in the States. It's already down 65% over the last 6 days. It's lower by more than 20% this morning. So that is a 7th day of really heavy losses. You have the banks feeling the heat this morning as we're seeing that bid for haven in the Treasury market. Yields coming lower. That's taking down the likes of JP Morgan and Citigroup. And you're also seeing some leasing companies moving lower as well. AirCap, one of them, because of the sanctions as they relate to airplanes and Russia. That could be a huge threat to that company in particular that has about $2.5 billion worth of assets in Russia and Ukraine. So that stock also taking a leg lower in early hours.
Katie, thank you. One big focus for us through this morning, self-imposed restrictions. This from Reuters and BP. BP cancelling fuel oil loadings from the Russian Black Sea port. That again from Reuters. BP cancelling fuel oil loadings from the Russian Black Sea port. More on that a little bit later this morning. Coming up, investors placing their bets on the Fed's path to tighten amid escalating geopolitical tensions.
At the end of the year, I suspect we'll end up with 4, maybe 5 hikes at most, and inflation will still be running hot. Inflation expectations will be an issue.
That's next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season continues.
The Metaverse to Spotify to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity. Bloomberg, the fastest numbers and analysis you trust.
15 minutes away from the opening hour, just getting some breaking news from the finance minister. Ukraine to auction the first war bonds on March 1st. That headline just crossing: Ukraine to auction the first war bonds on March 1st. What does all of this mean for Federal Reserve? This is the take from Federated. Here's the quote: "This conflict implies a further deterioration of the already tricky growth-inflation trade-off central banks have been facing. It is fair to say that the crisis increases the room for central banks' policy mistakes." With more, here's Mike McKee. Morning, Mike.
Good morning, John. Well, we just don't know what the scope is or how wide the error band is for the central banks of the world. But you take a look at what's happened in the last couple of days, and markets have started to price out more aggressive tightening. You can see the Bank of England and the Fed are still expected to be raising rates, but not as far as they were, say, a week ago or so. And you can see that at this point, the European Central Bank isn't expected to do anything. That kind of pushes against the idea that by the end of the year, they would be raising rates. It's all going to depend on what happens. And again, too early to tell. The one thing the Fed may get involved in is something you were talking about a little earlier, and that was Zoltan Polzer's comment over the weekend, that he thinks that the Russians, after they sold treasuries, put all that money into Forex swaps. And as they are a counterparty now, and nobody can they can't sell anything, there's a good possibility of defaults. And you can see the forward rate agreements and OIS chart there. That's a measure of bank instability, and it's spiked today. There is concern about a demand for dollars, a shortage of dollars out there, and the Fed may be forced, according to Polzer, to make some available, to increase liquidity, which might raise the size of its balance sheet at a time when they're trying to shrink it. Now, there is data this week that isn't going to make a whole lot of difference given the larger context of the world. We get ISM manufacturing tomorrow. The big news is going to be Jay Powell speaking on Wednesday and Thursday, the testimony known as Humphrey Hawkins. He will give us the latest thinking at the Fed over what this is going to mean for the U.S. economy, and a lot of that's going to depend on what it means for economies in Europe. And then on Friday, of course, Jobs Day, but that's going to be really overshadowed by the war at this point.
Not even talking about it at the moment, are we, Mike? Thank you. 400k, the estimate this Friday. Here's the take from Citi. For them, not much has changed. The quote as follows: "Despite elevated uncertainty, we have not changed our base case outlook for 100 basis points worth of rate hikes by the June FOMC meeting. We do not see geopolitical developments as they stand now as taking the possibility of a 50 basis point rate hike in March entirely off the table." Ashok Bhatia, I want to come straight to you. You mentioned this briefly. You do think it changes things?
Yeah, we think 50 basis points is off the table. I mean, that was unlikely to begin with, and think it's off the table now. And the reason is, the last few months, the markets and the Fed have been, able to 100% focus on the inflation risks. And so policy has been driven about the response to elevated inflation, and it's led to, escalating, hike expectations. And now we think this is going to introduce some downside growth risks. We don't think it's significant. We don't think it's going to be material, but the central banks are now going to have to be a little bit more balanced on growth versus inflation. The other element of this is that, the Fed and other central banks have stopped talking about transitory inflation, but it doesn't mean that they still don't, in the back of their minds, think that's a possibility. And this will allow that to kind of re-enter the dialogue a little bit. So net, yeah, the central banks are going to hike. We think this actually reduces the chance of a policy mistake from the Fed and other banks. Hiking cycles can be more elongated rather than accelerated. And that ultimately, is a bit of a positive for markets.
So, Badra, your take?
I think I agree with that. I think, having 7 hikes by the end of the year seems very, very aggressive. We're still, on the camp that the Fed will hike rates 5 times and introduce some sort of a balance sheet unwind or runoff, announcement in the middle of the year. That balance sheet runoff could be quite large. You're looking at perhaps $100 billion a month, capped, $1.5 trillion over the next year and a half. And, broadly speaking, even the curve is very, very flat. The 2 cents part of the curve is around 40 basis points. I think an aggressive path of rate hikes is going to flatten out the curve even more. So I think they're going to be very, very mindful of developments, not just on the geopolitical front, but also on what the impact of tighter monetary policy is going to be on growth, and they don't really want to slow down growth. They want to see a prolonged period of expansion. So they'd much rather spread out those hikes over the next few years.
The Goldman team and the Untitled came out this morning and raised their inflation outlook. Matt, what was interesting for me is not just the inflation outlook, they threw in an extra hike for next year as well. So for their 2023 inflation outlook, that's up. 22, that's up. And a slightly higher terminal Fed funds rate at 2.75 to 3. Matt, what's been interesting for me, just going across bank to bank over the last week, is that not many banks have actually changed their call on the Fed, even though this is all played out through Europe.
I don't think it makes a lot of sense. I think you do have to adapt. I think if Powell says he's going to be nimble, and that was the big tagline of this whole thing, and then you have this massive geopolitical shock to the system, and then saying they're not going to be nimble, I think that's you're not catching the biggest takeaway here. And I do think they're going to pivot. Oddly enough, the curve is steepening. I mean, I think there's been some really good points here that we think 4 to 5 rate hikes is about right. We think that the curve is really flat, and that if they did go 50 basis points, you'd likely invert the curve very shortly thereafter. And so the odd twist to this is that the curve's steepening while everything else is looking at this risk-off environment. And I think that's telling you the bond market's saying, hey, if the Fed doesn't aggressively hike here, it means they're not going to make a policy mistake, and it could mean that this cycle is actually elongated because we're having this pause here in risk assets and volatility, but it could actually mean that they do not make a policy mistake, which would be better overall for the economic cycle.
Ashok, I was just going through the 3 points that you made in the last 30 minutes, that the peak of central bank tightening expectations has perhaps passed. You also said commodities would contribute to elevated inflation for longer in your notes. And the third point, the markets will begin to price increasingly towards negative growth outcomes. Are the first two compatible? Ashok, this idea that we will have more persistent, higher inflation, but expectations for a more hawkish Fed have perhaps passed?
Yeah, because I think the way you reconcile that is that although inflation may remain more elevated for 6 months or 12 months, it allows the central banks to have a bit more uncertainty, and there is a bit more uncertainty about how transitory that is. This does increase the chances. You were talking a little bit about, is Russia going to default on its debt? We've got the bonds are certainly putting a significant probability on that. There's an interest payment coming up in March, mid-March, which we'll have better visibility about. Yeah. So these types of things are introducing that growth dynamic, which increases the possibility of slower growth outcomes in 2023 and 24. And I think, we think allows the bank to think about this elevated inflation as perhaps transitory from a little bit more of an intermediate time frame. So it's going to be volatile, and it's going to be a bit of threading the needle from the central banks. But I think those two can be reconciled.
Let's get it messier, that's for sure. Ashok, Matt, Subhadra sticking with us. Up next on the program, your morning calls.
When you think space, you probably think one space agency that travels under the radar is ESA. Which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Command to ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Equities are lower here. Let's get to your morning calls. First up, BMO upgrading Dollar Tree to outperform, highlighting a favourable risk reward with consensus expectations too low. UBS downgrading AbbVie, struggling to see any meaningful upside after the stock's recent outperformance. And finally, Wolf Research upgrading Lockheed Martin, expecting stronger international military spending given the developments in Ukraine.